फिर बीजेपी का मुख्यमंत्री बिहार में होगा, यह एक बड़ा सवाल है।
And before we wrap, we dive back to the conflict in West Asia. This region is no stranger to wars. Now, how did previous conflicts impact global economy and energy prices? Well, Ritu Singh is joining us with a few answers and her analysis. Ritu.
Oil and geopolitics have a long, consistent history, and the Iran-u.s. conflict is just the latest factor at play. Brent crude prices surged 8% in a single session on Monday, the sharpest one-day move in more than 4 years, and again today it is up, rallying 12% in 2 sessions. The screen tells you everything you need to know on how oil prices have reacted to wars. The Gulf War, for instance, took oil from $17 to a barrel to $46. The Ukraine-Russia conflict similarly to $139 a barrel, and so on. So every crisis has spiked oil prices, most normalized within weeks. The Arab Spring, though, was the one exception when oil stayed above $100 for more than 3 years. So the question this time, as always, is how long? Now for India, every oil shock also has a rupee echo as well, and we've already seen the rupee hit a record low in trade today, and that is not a coincidence. This is a pattern that has repeated every single time oil prices have spiked. The Gulf War, rupee devalued to 24.58 to a dollar. The global financial crisis of 2008, it fell to 51.75. Ukraine war, it crossed 80. So from 17 rupees in 1991 to more than 92 rupees today, every oil crisis compresses into months what would have otherwise taken years. Now, as for the impact on India's macros, MK estimates that every $10 per barrel sustained rise will widen India's current account deficit by 0.5% of the GDP, hit retail inflation by 35 basis points, WPI by 130 basis points, and clip the GDP growth by 15 to 20 basis points. Nomura says every 10% crude rise worsens the CAD by 0.4% of the GDP. Inflation could be sharply impacted. HDFC Bank calls FY27, and I quote, a matrix of ifs and buts. Elara Capital says $90 oil alone adds 0.3 to 0.4 percentage points to the FY27 CAD baseline. So how exposed is India? According to government sources, India has 25 days of crude and petroleum stocks. LNG is comfortable for 2 to 3 weeks. LPG for 25 to 30 days. Critically, 40% of India's supplies are routed through the Strait of Hormuz, and 60% comes from elsewhere, which is our buffer. But the structural vulnerability is real given India imports most of its crude oil. But India's forex reserves also stand at $723.61 billion, the strongest cushion India has ever carried into a crisis of this kind. Now, if this turns out to be a short conflict, India is well insulated. But in case of a prolonged conflict, our current account deficit widens, the rupee will stay under pressure, inflation risks will build up, and the RBI's rate path will get complicated.
And with that, it's a wrap on this edition of India Business Hour. Thank you so much for watching. News and updates will continue right here on CNBC-TV18.